Ladies and gentlemen, now we're going to move on to our first panel discussion this afternoon. The title of this panel discussion, or the topic for today, is Exchanges, Banks, and Their Relationship with Currency Fluidity. Let us welcome our moderator for this panel discussion, Mike Dudas, the Block founder and CEO. Okay, welcome, Mike. Good afternoon. Yes. Let us also welcome Vanessa Chow, CBX Exchange Managing Director. Mike Kayamori, QUOINE co-founder, CEO. Phillip, B2C2 Japan CEO. Marie, Gate.io CMO. She also delivered a keynote presentation this early in the morning. And Kevin Cha for Coinone CEO. We have almost everyone on stage. I'm going to pass it on to you. Thank you.
Nice to meet you. Great.
Looks like we have one lonely seat. We'll just get fired up and start. So Mike Dudas, CEO of The Block. It's a media and information site for cryptocurrencies, primarily in the US, Europe, and expanding into Asia. Really excited to be moderating a panel today here with some unbelievably talented founders and leaders in market structure. So our topic today is exchanges, banks, and their relationships with currency fluidity. We'll explain what that means as we go through the session, but would love if each person could spend a minute just introducing themselves and their business.
Okay. I'm Vanessa Cao, from Managing Director from CBX Exchange. We are a cryptocurrency exchange based in Dubai, and we are focusing on Dubai market and Middle East market. Since Middle East is very still mysterious to the cryptocurrency, we are focused on expanding the cryptocurrency to the Middle East market. And I used to work at Sequoia Capital as an investor focused on TMT and the consumer sector for investing. And before I joined the CPX, I was worked at GR Capital as managing director, which is angel investor for the Binance. Yeah, that's all. Thank you.
So your resume is 10 times more impressive than mine.
Yeah, my most experience is for investment, and this is my first time to running a real company for blockchain.
Hi everyone, my name is Marie Tatibouet, and I'm the CMO at Gate Technology. Gate Technology was founded in 2013, and our primary product has been Gate.io, making us one of the oldest crypto exchanges in the market. We also launched Wallet.io to ensure safety of the assets for the users. And later this year, we will be launching our decentralized exchange and launching our public blockchain, GateChain. GateChain's main objective is to solve the industry's two biggest issues, which is recovering lost funds and recovering hacked funds. And I'm really happy to say that our blockchain is going to be able to solve both of those problems. If you want more details, please feel free to come and find out more or watch the presentation I gave earlier today on the website.
Hi, my name is Phillip Gillespie. I'm a CEO of B2C2 Japan, basically an OTC liquidity provider focused on electronic market making. Before B2C2, I was running the systematic market making desk at Goldman Sachs London. And before that, I was running the systematic market making for JP Morgan Asia. So a little bit more from traditional finance background, focused specifically on kind of electronic market making. Thank you.
Hi guys, I'm Kevin Chow. I'm CEO of Coinone. Coinone is one of the biggest and trustful exchange in Korea, and one of the 4 exchanges having legit bank accounts. So I hope I can give you some insights about Korean market, because Korean market is pretty big market, but it's not known outside yet. So if you have any questions, you can ask me.
Can we please get a microphone for Mike?
I apologize to be late. My name is Mike Kayamori. I'm the co-founder CEO of Liquid. We are a regulated exchange in Japan. We were the first global exchange to be regulated and licensed in Japan. We just celebrated our 5th-year anniversary as well. So when we started an exchange, it was only Bitcoin, right? So there was no Ethereum and there was nothing else. So we had to work with banks. We had to work with regulators, and hopefully I can share that today with everybody. Thank you.
Incredible. Thank you, guys. That's the fastest round of introductions I've ever seen, but super substantive. I'd love to start with Phillip. So Phillip and I met for about 30 minutes earlier. He had a number of thoughts. And what I'd like you to chat about, Phillip, is what does the fluidity of money mean? And then, how does that impact, today's cryptocurrency market structure?
Well, I'm not so sure about fluidity money, but I guess just given the fact that this is about exchanges and banks, I mean, one thing is I used to work at Lehman Brothers, right? So
Sorry.
The 2008 financial crisis is pretty fresh in my mind, and for a lot of people, it's 10 years ago. You forget about it, but it's kind of interesting because crypto, Bitcoin, kind of rose from the ashes of the limits of fractional reserve banking and from the financial crisis. So when we talk about fluidity and stuff, I'm not so sure, but when we talk about kind of how crypto is related to the banking and finance sector and whatnot, I mean, basically it wouldn't exist without the inefficiencies in banking, right? And I don't know if we want to go into
dive just a little bit deeper. Give us 2 or 3 examples of what you mean by inefficiency.
Yeah, so let's say 2008, 2009, 10 years ago. Who cares, right? We have short memory. We forget about that. So let's look at 2019, and I think others will touch on this as well. But you want to start a crypto business. You go to the banks and you say, hey, I would like a bank account. I would like a corporate loan. They'll say, sorry, can't deal with you guys. You guys are in crypto. And a lot of that comes from a bit of a lack of knowledge, lack of education, but also AML, KYC concerns, and whatnot. So what's really interesting is that everything you hear, like why is BitMEX so big? Why is derivatives market so important? Where is the liquidity? Why are regulators acting in certain areas and not others? They all have to do with the fact that there's banking and exchange inefficiencies in this system. And I guess that's what we're going to.
And that's globally, right?
Yeah, globally.
So we see it in the U.S. where it's almost impossible to get banked as a crypto business. There's a handful of folks, but you see that in other countries. Would anybody on the panel like to expand upon that from their own personal experience?
Oh yeah, I want to talk about the role of exchange. Ideally, blockchain should work without any exchanges, without fiat currency. But before that, cryptocurrency exchange would work as a bridge between fiat currency and blockchain-based currency, like cryptocurrency. So I think that's our role. But currently, if we cannot say it's ideal status. So most of users want to invest on cryptocurrency at the crypto exchange. So so many people put their having their money with fiat currency and then invest on cryptocurrency, going to bank and send money to exchange, and then after closing their position, then they withdraw their money back to fiat. So that's why banking is very important to exchange business.
Marie, I'd love to.
I was going to say, definitely like one of the first questions that we hear as an exchange is, am I going to be able to buy with euros or dollars? And on our exchange, that's not the case, but we have such a large user base.
Where are you accessible?
We're accessible everywhere in the world.
Okay.
But we do have a lot of Chinese users, and our OTC platform, now we're at 3 million users. So OTC platforms are great, but it's true that you need to have enough users to be able to trade with each other. We've been around for a long time. We have a lot of liquidity, so that's definitely possible for us. And I think, that's kind of what we want to push towards.
Can I follow up on that? So you have a number of OTC Chinese users. How does that work? Is that sort of blessed by the state? Is it something that needs to happen covertly? Walk us through that process.
Yeah, if users want to exchange money with the Chinese yuan, then they're going to use our platform. We don't take any fees on that.
You're effectively just a matchmaker.
Exactly, and so then they're going to be able to trade with one of their peers.
Since I'm based in Shanghai, I know Chinese market very well, and I can explain why the Chinese yuan can get easily into the cryptocurrency right now. And the regulation here is show their very clear attitude to ban the cryptocurrency, especially for all coins, cryptocurrency trading, but not show their clear attitude to Bitcoin. So it's clearly attitude from the government says that you can buy Bitcoin from your bank account, especially for WeChat and Alipay. But you need to let the bank knows you are buying Bitcoin. Yeah, this is the very key point. And for the KYC and the AML part in China, and still very strict for all the users buying the Bitcoin. So this is why the liquidity for the whole cryptocurrency market is so different since 2017, because China already banned the fiat channel into the cryptocurrency. That's why we based in Dubai, we are looking for the government supporting for the big institutional to buy the Bitcoin, which need to meet the KYC and AML process. So this is what we are doing to looking for new liquidity for the whole market.
Interesting. On a go-forward basis, I'm going to use the word fluidity because it's the title of the panel. We all have sort of struggled with exactly what that means, but the question: how do we think all of the things that we just talked about will impact the split or the proportion of spot transactions versus OTC and non-spot transactions in the cryptocurrency market, and sort of pricing as well?
Yeah, I guess I can talk about that. So I guess what we mean here is exchange versus probably OTC, right? Like I think FX is like 99% OTC. Crypto is a lot of it is driven by exchange, and why that would be the case.
And crypto is a much higher percentage. I'm sorry, of OTC, or
I think it's much less, much more exchange driven than other asset classes.
Yep.
So I think there's a lot of a diverse background in the audience, but this might be an interesting story. When we were at Goldman in 2017, when crypto was really hot and Bitcoin was really hot, there was a serious discussion on whether investment banks like Goldman should start doing market making in crypto. And I think the word like OTC gets thrown around quite a bit, and there's a bit of a misunderstanding. Like if we go, behind the scene and we exchange passports and whatnot, and run a quick KYC, and then we do a crypto. Someone gives me Bitcoin, I give them fiat. Is that OTC? I guess it's not scalable. FX is a $1.7 trillion a day market. Crypto is nowhere near it. So in order to support that big, in order to support the global economy and not be a niche product, you need a lot of things. And when we were at Goldman, we looked and we said, hey, you know what? There's still a lot of work to be done. You need central clearing. There's too much counterparty risk. The infrastructure, the API, and all of these things need to be set up.
Where were you based, by the way? Was this a Goldman global initiative?
This was with the senior partners on the security side. And so this is interesting, right? Because in order for OTC to really dominate like FX, you need to get everything done from, millions of things done. And that's what we are doing right now. But until that's done, OTC is not going to be mega scalable to the point where you can just go and just like you trade FX, you just go, mine yours, mine yours, mine yours.
And it's clear that's not working. I mean, you've seen the turnover at the folks, at least in the United States, the OTC desks that are trying to be developed. Tremendous amounts of turnover and not a lot of traction.
Yeah, and I think what's really interesting is people, right? We tend to think like, oh my God, CME is coming online. Wow, institutionalization of space. Well, not so much. It's a gradual progress. What I can say is that OTC will grow, but it's slow. And the reason it's slow is because there's a lot of inefficiencies that I think people in this room are trying to really solve. So until that's done, crypto is going to be very unique, and
Yeah.
OTC is going to be quite
I'd
different.
love somebody else on the panel to sort of comment on OTC versus spot and the importance as well.
Yeah, so I can share the Japanese market. Japan, we talk about FX, OTC dominates, but in Japan, the retail FX market, I mean, they're the largest retail FX market in the world, right? And that's why there's words like Mrs. Watanabe, where a retail trader can really move the FX market. And that's why also cryptocurrency became popular in Japan, because rather than investing in equities or commodities or derivatives, it was a natural extension for the retail FX market to come into to crypto. And that's why when you look at specifically in the Japanese market, it's almost an extension of these retail FX people coming into crypto as well. So when you look at that, it's probably different across different regions, right? So certain markets might be more OTC driven,
Yep.
but that's the efficiency will kick in.
And where you're OTC driven, getting back to the sort of headline title of this panel, you're avoiding some of the issues we're talking about, right? Sort of exchange risk, banking risk, et cetera. It's just me and a counterparty. Would anybody be interested in talking about counterparty risk in OTC trading and crypto relative to other asset classes?
Maybe I can share some our information from our exchanges. We are running a very big OTC desk on the CBX. We have done the OTC service for like over 3 years, and our volume for every day like over several. It's like 1 million USD for every day. We are actually the biggest OTC desk in China, and we have our group for OTC trader or brokers. And the interesting information shows that there are two kind of OTC traders, especially in China. One is the big rich people. They are very interested in Bitcoin, and they just buy Bitcoin and store in his private key and no trade. It's like an asset holding. And the second part, the people, they are very professional traders. They have a lot of FX trading experience. They use the Bitcoin or the stable coin for arbitrage. So they trading volume is like very high, and they make a lot of money for the OTC trading. So this is two kind of peoples we are serving for every day. So and the most important part for doing OTC in China is that you still need to meet a lot of risk for KYC and AML, because the information is not very transparent, and you still you need to face the money laundering problem and some.
As an OTC desk, you're still...
Yeah. You still have facing the money laundering problem, especially from the customers. You don't know his background, because in China we have a very restrict bank systems to trading all the money's flow, and the account from the police side, they are know all the information from the money in and outcome. So for the OTC broker, you should get the whole information for the bank account, which the money has the problem too. So you can do the legal OTC for your customers to make your money there is clean.
Excellent. So obviously in the news, we've been writing about it almost daily at the block, but FATF, I'm sure we've all heard about that. And Marie, I'd love to turn to you and just get your perspective, to date, how the proceedings are affecting you, how you're looking at them, and sort of what adjustments it might cause to your business.
Sure. So I think obviously it's going to impact the.
And actually, do you mind just explaining really quickly what FATF is? So it effectively means sharing of, I don't want to get this wrong, but sort of customer information, KYC, and identity and transaction information between exchanges, correct?
Yeah. So basically, I think what we've seen a lot of different KYC services come onto the market this year, and I think next year especially. Regulation is happening this year, and I think will also happen the year to come.
Now, is it aggressive or is it more like, hey, it's coming? How are the regulators speaking with you, if you're able to share?
You know, originally I really thought that it would all happen this year, and now I think might be delayed a little. The Europeans, the French definitely spearheaded some of the legislation, and they're definitely pushing the EU into some of that legislation.
And do you see it impacting sort of the liquidity, the money flows, and participation in purchasing and selling of cryptocurrency?
I definitely think it's going to affect the market, and I think with all of the multi-licensing that'll be happening as well, which is probably not projected until the beginning of next year, which I think like some of the legislation, some of the bigger countries might not happen until the beginning of next year as well. I think that's going to influence the market, and I think that's when all of these KYC providers are going to see a lot of the exchanges and a lot of the partnerships that they want to make come through. Because, once you're licensed, then you want to make sure that everything happens by the book. So that's what we're looking at. We've traditionally stayed away from all of that because you don't want to start changing your product and then, have to deal with the regulation changing again. A lot of these governments have kind of changed their approach to crypto. And
No.
so making sure that we adjust our product, because adjusting your product, especially technically, is very costly, right?
Yeah.
So
and tell us a little bit about that. Is it is this a significant percent of your operating expenses, sort of compliance with these varying regulatory requirements?
yeah, it's definitely a cost that we incur, and it's definitely those costs will definitely increase as
Oh, interesting. So there's not sort of a decrease from, hey, we've done XYZ already. It's basically layering more and more regulation on top.
Yeah, especially since all of the regulation is not going to be the same.
Yep, globally. Mike?
Yeah, so if I can add a little bit of insight on the FATF, right? So as you may know, last week there was a G20 in Osaka, and concurrently there was this V20, which was the virtual currencies. So they had this V20 there as well, and the representatives from FATF flew in, so they were there.
And define, what's a representative from FATF?
Well, so FATF is an intergovernmental organization, and
And how do they nominate? So I think this is really interesting and important.
Yeah, so normally they don't participate in these conferences, but it was the first time that someone from FATF was there. And because they were there, the Japanese regulators were there as well. And the Japanese Official Association of Virtual Currency Association also were there. So almost all of the license exchanges had to be there as well. So it suddenly became one of these bigger things. And the most important takeaway, I mean, there's many things. From a FATF perspective is there's a fine rule. And they're mentioning that within 12 months, they want the jurisdictions to comply. The biggest challenge there is they're trying to put a travel rule, right? So anytime a customer wants to do a withdrawal or do a money transfer, they need to write beneficiary. So similar to the SWIFT, that where you need to put beneficiary and who they are, that from an FATF perspective, they want that in, and that's called the travel rule, right? So from
on a very tight timeline, right?
On a very tight timeline, or else the governments, the regulators will be like pushed and punished, right? So now they'll go to crypto exchanges and they'll mandate that.
Kevin, how are you responding to this?
Oh yeah. I want to start from current status of regulation in Korea. In Korea, governments are not regulating exchanges directly, but they regulate exchanges indirectly via banks. They use banks, so we are regulated and controlled by banks. So because banks are in charge of AML and KYC, so if we do not do KYC or some AML responsibility, then they will shut down their accounts. So we are already doing perfect KYC and AML. So I think it would be not burden for us, but the reason why government is not trying to regulate exchanges directly is to make it worse. Then they have to define what Bitcoin is and what cryptocurrency is. But they don't want to do right now. But I hope FATF will enforce Korean government or other governments to regulate, make laws.
Awesome. So Kevin, I'd like to go back to you, and I'd love to chat a little bit. And I just called you Kevin, and I meant Phillip. Phillip, I'd love to chat with you about sort of flows into and out of cryptocurrency exchanges over the coming years. You and I met earlier, and we chatted a little bit about key drivers to money flows, and you put a framework together that I actually hadn't heard previously, which was a developing world versus developed world framework. Would you mind expanding on that a little bit?
Yeah, sure. I haven't attended other panels, so I don't know if other people talked about this, but from a macro perspective, I think it's really important to look at crypto from two very split kind of viewpoints. One is the developed world viewpoint, and one is the emerging markets viewpoint. Two completely different market, two different use cases, and two different growth factors, I think. Maybe this is more about pure markets and finance, but this will be the driver of crypto, I think. And so let's take the developed markets, for example. Gold, great example, right? Gold is rallying right now. A lot of geopolitical risk, trade war threats, 2020 election, is Trump going to win, whatnot. A lot of people are looking to diversify their portfolio, and kind of, when equity is all-time high, you might want to try to, and there's rising risk factors, you might want to look at allocating to some safe havens. So quite interesting. Right now, gold and Bitcoin rallying at the same time. People can argue many different factors, but one could be the digital gold argument, which is, kind of continuously comes into to a lot of discussion. And in a sense, Bitcoin represents a long on decentralization, like a call option on decentralization, a put option on central bank easing. I mean, it's complicated, but that's how I think developed markets kind of see the product, and that's one growth factor. The other one is emerging markets, which is completely different. It's quite interesting. So talk about geopolitics and talk about trade wars. Things are moving towards protectionism, and a lot of these countries, we've talked about China, Korea, Japan, all these kind of different kinds of, Turkey, all of these different kind of countries. A lot of countries have capital controls. So if you're worried, like renminbi is going to depreciate, for example, or, if you're worried about these things and you need to get your money out or you need to move your money around, these guys can't buy bars of gold and put it in a suitcase and go into the airplane. They need to look at alternatives. So the influx of money and influx of kind of, the pickup in interest might come from capital flight. And that's, again, a hot discussion topic, but two different angles, two different drivers converges into potentially crypto's demand. Now, it's a big topic in itself, which probably takes hours to talk about, but I think that's a key thing to watch out for in the next few years.
So I'll just sort of open it up to the rest of the panel. Everybody here is from a developed world economy, and I'd be interested to know, get a general pulse, just a quick answer. Do you believe the central bank in your respective country is being too forceful, too aggressive and getting into your business too much, or are they being fair, hands off, listening, and open? Maybe we'll start with you, Mike.
Yeah, so I think inevitably they will have to come in, and there's going to be set rules. I think because of I think the strongest driver is, again, I apologize that I go back to the FATF,
Please.
but they have so much influence over regulators, and because of that, because their influence is not only in crypto exchanges. That's only a small subset from an FATF perspective. It's banking in general. It's all of, it's because it's a financial action task force.
Now, do you see risk, and I don't mean to interrupt, but in the U.S. actually just ignoring FATF, or is that just not a chance, not something that might happen?
I'm sorry, your question was?
The U.S., the United States, ignoring FATF.
No, I think no government, especially economic powerhouses like G20,
Yep.
they will not be able to ignore or just pass through an FATF guideline.
Yep.
Because they are part of the FATF member countries. The ones who might ignore are more the smaller countries or
Seychelles.
emerging markets, but if they're part of the EU, there'll be more of a pressure there, because it's not only about crypto, it's the entire financial ecosystem. And then from that perspective, I think there's going to be a more consistent regulatory pressure from banks and regulators.
And so if we are able to get these sort of global, consistent, established rules, do you think that will be an accelerant to what we'll call fluidity, meaning increased money flows into this crypto ecosystem?
Yes, I think there's going to be a pain and correction first, but then after people start accepting that these are the new rules. Unfortunately, it's a little different from the past 10 years where it was more ideology driven and freedom, that it needs to work within a confined set of rules. And there's going to be an enormous amount of pain in terms of exchanges and this ecosystem adapting to that. But after that, I think it's going to increase. More mainstream institutions will come in, and that will help the industry grow.
Awesome. Do other folks want to comment on this? The next fun question is one that I think you'll enjoy. It's a forward-looking, futuristic one.
Yeah. I'm very interested in DF these days because it will drive more fluid of cryptocurrency in upcoming years. Because until now, everybody focused on platform blockchains. When the Ethereum comes out, then most of people say it will be used in the future a lot because it's a new technology. But there were no use cases until now. Very, very few use cases. So,
you said it, not me.
Yeah,
I agree.
So, yeah, looking back 2017, until 2017 in Korea, there were few people knows about Bitcoin and cryptocurrency, blockchain. And when I say I'm doing this business for Bitcoin, then everybody say don't do that because I don't know Bitcoin and it will not successful. But after cryptocurrency boom in 2017, everybody knows about what EOS is and what Ethereum is.
Tell them to forget that.
Yeah.
No, I'm kidding.
A lot of people, a lot of my friends are coming into industry and they are making new business with DFs. So I hope DFs will change our future. And
EOS, you said?
What?
EOS?
Oh, I mean DFs.
Oh.
Yeah, decentralized Fs.
Yep.
So when if DFs are coming out a lot, then Korean government or other governments will be positive and it will be much better.
And from my sort of U.S. perspective, we're not seeing that uptake here, but I just think it's truly a cultural thing and an aversion to kind of paying for goods, digitally. But I think that's going to change very quickly as we see having folks having incredible amounts of fun and making money. Would you like to comment, or should we go to the forward-looking question? I figure in 6 minutes. So I would love to know from everyone on this panel, what is the single most exciting thing that will happen over the next year, 18 months, that will lead, and go wild, that will lead to the maturation of crypto markets? I think pretty much everybody in this room is not Dr. Doom, and we're really optimistic about the future of cryptocurrencies. So what is a really big near-term catalyst, either one that's easy to predict or one that people might not expect, that really excites you and you look forward to?
Okay. As we can say, see a lot of changes in this year, especially the platform tokens like BNB, HT, OKB. And this is the big signal shows that only the profitable company can stay longer than the other altcoins, especially.
It's beautiful to see profitable companies. Right?
Yeah. Then the utility token. So I'm thinking of the future like STO will be the next step, and the government will not specify this is security token, but we can see that all the company behind the tokens, which can make money, then they can get all the the price show up. So this is the big difference between utility token and the security token right now. And U.S. government, they have shown a little open attitude for the security token right now. So we are still try to do a lot of efforts on the security token, which means to have a lot of companies which can make monies to bring them into the blockchain.
Unquestionably, U.S. regulators are getting a tremendous amount of pressure as investors, look at Leo, look at BNB, and see these ecosystems being built around companies and growing. And it's
very like security token, right?
Yep.
Yeah, they show their financial report quarterly and burn their tokens. Like we have already make a lot of money. Then
so that's your big thing.
Yeah, this a big thing.
Okay.
I would have two different opinions. What I'm most excited about is the launching of decentralized exchanges. I think it's the way that we're going to be able to achieve blockchain's original vision, Bitcoin's original vision, which is true financial freedom, true financial sovereignty. And until this year, decentralized exchanges have not been very user-friendly.
No liquidity, et cetera. So you're speaking of Binance DEX.
Or the DEX that we'll be launching
You're
at the
launching
end of the
one,
year.
yep. Pardon me, I knew that.
And I think, because we have a very advanced centralized exchange, the centralized exchange and the decentralized exchange will be able to communicate together and provide a really smooth user experience. Like I said, the technology until this year has not been available. We've been working on our decentralized exchange for 2 years. And I think that's going to really change the industry and change, be able to achieve that vision. However, what I would say in terms of really changing the industry and maturing the industry is, seeing more volume in the crypto space. And what we've seen on our platform when we launched margin trading and perpetual contracts about 8 months ago was that the users are becoming a lot more sophisticated, and all of the derivatives and all of these different financial solutions for crypto that have been developed for crypto are really taking off. And I think, if there is more volume, there's going to be a lot more. It's going to be taken a lot more seriously on the global financial stage, and I think that's going to change a lot.
Exciting, Phillip.
So let's be honest. A year for 18 months. Let's look at macro factors. It's going to converge. But I like it to take everybody on a journey, on a rocket ship, and just completely forget about what we're talking about.
Right, you got 45 seconds.
Yeah, so if we
faster.
zoom out of crypto and look at the financial service industry, what's really interesting, I think, and the hottest thing, I think, is that tech is going to start coming into finance. And the bridge between tech industry coming into finance, Facebook, right, is going to be crypto. Look at Japan. You have a Rakuten, the Amazon equivalent. You can buy securities. You can get a credit card there. You can buy stocks. You can buy crypto, and soon enough. So when you start having those mergers, I think that's going to be the next evolution, where you start seeing tech companies potentially acquiring some of the crypto firms and then really growing out. So to me, I think, from a big business perspective, that's something that we all have to look out for in the next 2, 3, 4, 5 years.
Kevin.
Yeah, I'm really waiting for legalization because studying our business, we were always nervous about regulation. We were very hard to get bank account, and if financial accident occurs, then banks always say we will cut our relationship. So we were always nervous, but FATF rules are coming up, and Korean government is getting positive. So I'm looking for legalization.
And we see crypto banks, for example, in the U.S. that are IPOing. So we're moving in the right direction.
Yeah.
Yeah.
I guess so.
Yeah, so other than all the things that
18 seconds.
the
We'll
panelists
give
mentioned,
you bonus
is
time.
I do believe that the single biggest catalyst, like it or not, is the Facebook Libra, right? When you look at 2 billion users that can potentially come in, and hopefully they launch, was it Q1 next year? So within the next year, like, you look at every media's talking about it, news outlets, CNN, CNBC. So when I look at that, I hope they can pull it off, work with the regulators, and that will allow mass adoption. And people can disagree if it's cryptocurrency or digital money, but it's a good thing for this industry.
It's a very interesting thing. Everybody should read about it at theblockcrypto.com. Just kidding. Thank you so much to our panelists. Really appreciate your thoughts, time, and our audience. Cheers.
Thank
Thank
you.
you.
Thank you. Thank you, moderator Mike, and the panel discussion.